Hello, options traders. Steve Gans here. And yes, I still got the funky eye strain glasses on. So I wanted to take this opportunity as PayPal is getting close to expiration just to show the two different variations of the trade from when I originally put it on and then after I adjusted it and how those two trades played out a little bit differently. Again, these don't expire for until Friday. And if I had these trades on live, I certainly would be closing them at this stage of the game. So let's just take a look, first of all, at the cash secured put that I had originally sold, and that was back on June 13th. So a little over a month ago, I sold this cash secured put in PayPal. PayPal had since run up. It's now essentially at its max profit of $130. It's not quite there. It's $3 away from that max profit. Am I going to leave this on and maintain that risk to pick up those last $3? No, I'm not. But as you'll also recall, PayPal had run up a fair amount at one point. And when it ran up significantly, it got to a point where I felt like, gee, it's probably not going to go much higher. Okay, so if I look at a chart of PayPal back here, it had run up pretty significantly and had run into what I consider to be a resistance area. I did not expect that it was probably going to go much higher than that. So at that point, I chose to come in and sell a call spread against my existing position, essentially turning it into a form of a jade lizard, which is a pretty common trade that Liz and Jenny on Tasty Trade share with everyone. So anyhow, this jade lizard, it basically has the component of my original naked put. And then again, when the market rallied up quite a bit, I picked a point. In my case, I picked 76, and I decided to sell a 76 call and buy a 78 call. So originally, this had a structure that was like this. By me selling this call at $2 wide, I added a new dimension to the trade. I added that short call spread. Now, by adding that short call spread, if the market did in fact stay below 76, I increased my trade. I did what I call juicing my trade, where I picked up an extra $40, $45, somewhere in that general range on this trade. Now, again, max profit's 185. I'm at 177. Am I going to hang around here and try to pick up that last $7.50? No, I'm not. I would be closing this trade out for sure at this point and not run the risk of something unusual happening. But at the end of the day, the goal behind this particular video is to just show you the couple different variations of the trade. So this trade, the naked put all by itself, left totally alone with a total no risk upside, no matter how high PayPal went. But again, anytime you're in an options trade, if you look at something like this, and gee, if this thing runs up and starts getting into what is likely to be a resistance area, this is where technical analysis comes into play. Why not sell a call spread against that position to, again, juice the trade? So that was the overall goal here, was just to share that concept and what you can do with certain trades from a standpoint of adding in an adjustment or adding in an extra segment into an original trade. So hopefully you found this useful. If you did, please give me a thumbs up, like, subscribe. Of course, always give me any comments you'd like below as well. Take care, everyone.